Hello everyone, hope you're doing well. I am trading here live. It's 10:30 a.m. on the 17th of May 2023, and I wanted to go over today a stop run reversal. Now you hear this a lot, and sometimes it's coming from traders who are just saying that because they had a losing trade, so they call it a stop run reversal. But what is a stop run reversal? Why does it happen? And how can you benefit from this? Well, a stop run reversal is when the money flow market makers, if you will, manipulate the price action to their benefit so that they can go ahead, get a better price, and then jam it in the face of the retail traders, and then, of course, capitalize on their trade by going in the opposite direction. I am going to showcase this by showing you the pound dollar. It's on the left, and we have GBP USD, and we're going to go over, let's see, a good example would be this 15-minute chart. So we came up to a level. It wasn't such a key level, but it was definitely hitting our moving average here on the daily. So that's the daily 20 period moving average. Came up there, hit it, and then got slammed down. At the same time, to the right, we have the S&P, okay? And because you have the pound dollar, which typically moves alongside risk on assets, you can see that there is a correlation to what's going on. Now, typically you have the Australian versus the US dollar, which has a better correlation, but today we'll just talk about the British pound because that's the one that I am trading to the long side. So hitting a key level is typically where a stop run reversal may begin, but not always the case. In this case, we had 9:30 a.m. U.S. stock market open, and at that point, that's when the move just began to the downside. Now, the same thing happened in equities. The move to the downside, and then let's see if we hit a key level, because I didn't even really have a look. It just looks like more of choppy price action than anything. Okay, so if we go to the daily chart, we can see that we did hit right around some of these support levels where they stopped in the past. So, one can call that a moderately stable key level, but nothing significant. So more, to my opinion, it's just more of chop that we're seeing here today. But is this a valid stop run reversal? Yes. However, we need to go ahead and break this area here up here. And if we do, then we can say, yes, indeed, that's a stop run reversal. So stop run reversal occurs when we have selling at a particular level. In this case, we had some consolidation. Let's just go back. We had some consolidation here on the pound dollar, and that's around the 24.80, well, 24.60 to 25 level to be exact. But right here, key level came up, hit that key level, which this is a consolidation area, so definitely a key level. And then we talked earlier about that 20 period on the daily, which I think that this here is more significant. So came up here, then we saw the reversal here, started to reverse. Now we need to break the 24.84, 85, 86 level. And if we do that, then we can call this a valid stop run reversal. But this is a stop run reversal in the makings. I do think we're going to come up here and break this area. Now, how do you avoid stop run reversals? Well, if you know that you are in a particular time period where this typically occurs, for example, the London Open and the US Open, then I would suggest trading, if you are in a trade, then trade very small. And yes, this is, you're hearing correctly, you don't have to use a stop. Now, if you're trading very small, then that's fine. It's up to you. I'm just telling you what I do. And another another strategy is to just wait for the chart to just start to look more stable, then you enter your trade. But really, this whole notion that a chart can look stable, there's just no stability in the markets, period. So, just know that, a lot of times US Open, London Open, you may see some of these reversals. And you also see them in Asian. We'll typically see that. Japanese market opens, you'll typically will see that yen go one way, then go another, and vice versa. All right, I hope this helped to shed some light on the stop run reversals that we do often see at market opens and what transpires. Again, it can just be chop after that reversal. But really, a stop run reversal would be defined when we move above this level, which was that previous little top, and then that would truly have been a stop run reversal. So just some thoughts. I hope this helps you to modify your strategy accordingly so you can optimize your profits. Everybody have a good one.